and then we show them what we have, and then that's it. So he's going to be telling you more about how you can really do this and do it right. So we're going right into it. So you can tell us more about how do we even start as an individual? How do you start? What does personal income tax mean? How do you file your tax as a startup less than 6 months, less than 12 months? Is there tax rebates for startups in Lagos State or in Nigeria as a whole, and all of that? Just run us through.
Awesome. Hi guys, it's good to be here. My name is David Okeowo, and I am so grateful to the Mentoree team for bringing me on this platform. It's such an amazing opportunity, and I look forward to an exciting time sharing with you guys. So on the topic of taxes as it relates to startups, it is important first and foremost to note and understand that your tax structure is dependent on your legal structure. Your tax structure is dependent on your legal structure. So for a business, typically in Nigeria, you are either registered as a business name, a limited liability company, or an incorporated trustee, otherwise known as NGOs, right? So, but for the most part, I'm going to focus on business names and limited liability companies because that is what most startups will register as. So your legal structure in terms of whether you're registered as a business name or a limited liability company would primarily determine the tax system that applied to you. Having said that, let me jump and describe something else, then I'm going to connect it together. What is something else? In Nigeria, there are two major tax collecting bodies, right? You have the Federal Inland Revenue Service, FIRS, which is the tax collection body for the federal government, and you have the State Internal Revenue Services. In Lagos State, we have Lagos State Internal Revenue Service, LIRS. In other states, there are other IRSs too. So take for instance, if you are an entrepreneur, you run a business out of Lagos State, you have to deal with the FIRS and the LIRS. If you run a business in Ogun State, you have to deal with the FIRS and probably OGIS, I think that's what they call them. So you have all these IRSs in all the different states. How then do we connect the dots? There are certain taxes that the FIRS is responsible for collecting, and there are certain taxes that LIRS is responsible for collecting. So what I'm going to do is to go one after the other. So I'm going to treat the business names first, and then I'm going to treat the limited liabilities second. So we're going to talk about the business names and the taxes that apply to them, and then the limited liability companies and the taxes that apply to them. Right. So let's go. Business names. If you're registered as a business name, the very first thing you need to understand is, according to law, your business is not a separate entity from you. You and your business are the same thing, right? So my name is Davis, and I have a company that is registered as a business name. Myself and my company are regarded as the same entity according to law, but the law just recognizes that I am operating a business using that name. As such, being a business name, the profit of the company at the end of the day is typically subject to tax, but the profit of the company is deemed to be my personal income. So at the end of the year, I am expected to pay what is called personal income tax as an entrepreneur. Now, the personal income tax for entrepreneurs is quite different from personal income tax for employees, because for employees, they pay what is known as pay as you earn, which is a scheme whereby their taxes are deducted from their salaries every month by their employers and remitted to the government. But as an entrepreneur, the government recognizes that you run a business, your business will only declare its profit at the end of the year, technically. So at the end of the year, when you declare your profit, that profit is subjected to tax. And you, the entrepreneur, are deemed to have access to all of that money. So once your year end comes, there's a calculation that, I can't share here because there's a lot of numbers and permutations, right? But those calculations are then applied to your profit. And then once they apply to your profit, then your tax payable is computed, and then you can pay that tax. But first thing you just need to understand is that the first tax that applies to you as a business name is personal income tax. This tax is paid annually. In fact, you have to pay it between the 1st of January if your business year end, typically 31st December, which most businesses are, you have to pay your taxes between 1st of January and 31st of March. That's the first one. And this personal income tax is actually payable to the LIRS, Lagos State Internal Revenue Service. You can walk into any LIRS office for inquiries, you could get the forms to fill, and then they'll tell you the procedure to pay. It's not a lot of stress, actually. You just have to fill a form and make a payment into the bank. Now, the second tax that applies to most business names is value added tax. VAT. Now, I'm going to explain VAT extensively now because it also applies to limited liability companies, but I'd like you to pay a lot of attention because it is one of the biggest problems you can ever have when it comes to tax. So the value-added tax is a consumption tax. Technically, it is not a tax on you as the business. It is a tax on the consumers that consume your product and your service. So the law states that every time you sell a product or every time you sell a service, you charge 5% of the invoice value as your own value-added tax. Now, take for instance, I sell milk by the sachet. And then if I sell 10 sachets of milk for 100 naira, 5% of 100 naira is 5 naira. So what I'm supposed to bill my customer is not 100 naira, but 105 naira. Being 100 naira for the milk, 5 naira for the value added tax. Now, what the law requires is that at the end of the month, myself as the business name owner or my company as a business name, I aggregate all the value added taxes that I have collected, right? I deduct all the value-added taxes that I, as the company, have paid to other suppliers, because when you, as the business as well, when you're buying things, sometimes you pay value-added taxes. When you pay those taxes, the government allows you to remove what you have paid from what you've collected. So when you remove what you've paid from what you've collected, the totality of the monies that you have left, you have to go and remit it to the FIRS on or before the 21st of the following month. So let's assume currently we're in the month of May, right? So all the taxes that I collect for the month of May, once I'm done with it, by June, on or before the 21st of June, I must put that money into the coffers of the FIRS. There's a form to fill that you have to fill and submit before the 21st of the next month, and you have to make the payment before the 21st of the next month. Here is why it is important. Failure to remit this tax attracts a fine of 5,000 naira. You might think 5,000 naira is not a lot of money, but here's the thing. This money is compounded every month. That's the first thing. And every single month has its own trail of penalties. So what I mean by that is, if you do not file in January and we are now in December, you're going to pay 5,000 naira fine for January, February, March till December. Then because you did not file for February as well, you're going to pay February, March, April till December. Because you did not file in March, you're going to pay March, April, like that. So it adds up to a lot. In fact, if you do not pay your VAT taxes for about a year and a half or 2 years, from a very basic calculation, your fines alone are going to be in the region of 1 million naira. So if you do not take care of this, because it's a monthly obligation, it's easy for you to pass over. If you do not take care of this, it's going to become a huge problem. So if you are an entrepreneur and you run a business name, be mindful of value-added tax, very important, and personal income tax. There are a few other bits and pieces of taxes here and there by the local government and a few other things, but those are not major. These are the two major ones, right? We could have ongoing conversations online after this stream, so we could talk about all of the minor ones if you really are interested in them. Now, the second type of business, limited liability companies. The difference between limited liability companies and business names is that a limited liability company is seen as a separate entity from its owner. So the owner is completely different from the business. Unlike the business name, when the owner and the business are one. So for limited liability company, there is the personal income tax for all the employees that work in that organization, including its directors, including its owners, including the entrepreneurs that created them. They need to pay their own personal income taxes. That is the very first one. Now, this can be structured in such a way that, like I mentioned earlier, the employer takes all of the salaries all of the taxes at source before paying salaries, aggregates them together, and pays into the coffers of the state government. By the way, personal income tax, like I said, is collected by the state government, so they pay it out to the state government. The second tax that applies to limited liability companies is the value-added tax that I explained earlier, and exactly the same scenario that applies to business names apply to limited liability company. It's a tax on your sales. You charge it on your customers. If you do not charge it on your customers, then the government will force you to pay it, because failure to pay it, you're going to be infringing on the law and you can go to jail. The third one that makes the limited liability company distinct is the company income tax. The company income tax is like the personal taxes that we pay, but because a company is a separate entity, the company itself needs to pay its own taxes. And that is why you have the company income tax. And the company income tax rate in Nigeria is 30% plus some extra education tax and things like that, brings it to a total of roughly 32% of your annual profit. So technically, if you made ₦1 million in profit at the end of any year, expect your taxes before deductions to be somewhere in the region of 320,000. So that is it for company income tax. There are also a bits and pieces of taxes, local government taxes and things like that you have all around. But for business names and limited liability companies, these are two major ones. I'm going to run through them quickly. For business name, you have to think about personal income tax and value-added tax. For companies, you have to think about personal income tax, value-added tax, company income tax. Your company income tax and your value-added tax is paid to the FIRS. Your personal income tax is paid to the state government of the state where you reside. So that's it about taxes in a nutshell, straight and simple. If you have further questions, you could ask on the Mentoree platform, and then we will provide responses to them.
We want to ask Davis further question on tax. Just go to www.mentoree.com.ng and you can search for Davis Okeowo and you can buzz him and you can ask all your questions. So we see you guys next.